Hey, welcome to Chopping It Up with the Keys. My name's Andre,
My name is Marcus Lewis.
and this is our show.
I'm Mike, man. Mike Murray, I'm a loan officer. Got the privilege to work with both of these guys, so thanks for having me, man. I think it's pretty cool.
You did
I like this idea. I mean, I think it can really pop off with something.
Yeah, we've been talking about it for a while, so it's about time to do something.
Get some action. COVID's getting better.
I guess 2022, we like, all right, let's just do it.
Yeah.
Keep talking about it. So, just speaking on, the new year, our biggest thing or how our conversation be is just like, just be you at the end of the day. Tackle all your goals, set your goals, and don't be scared to go after it.
It's easy said and done, though, right?
True.
Man, it's easy said and done, especially with COVID now. I mean, everybody's been hiding behind like this the virtual.
Yeah.
And now it's time to like start get back out there. People have lost that like personal touch of just being real, being honest, being yourself. And then whoever don't like it, man, they just don't like it.
Yeah.
How do y'all feel about that, not being able to like be around people? Have y'all been out in the mix and stuff like that?
Well, with me personally, I've been in the mix just with me, coaching and doing some of the things, entrepreneur stuff that I do outside of real estate. So I've definitely been around people, but just in the coaching world, we wear masks every day, all day at practice. So it's kind of tough.
Do they got one on the floor too? I mean, on the court?
We ran it on the field too. And our AD and our athletic director didn't play, so
Yeah.
but we didn't have any problems.
Y'all didn't have a lot of
we had no COVID
outbreaks?
issues at all.
Sheesh, man.
So
It seems like that's been the main injury for sports right now.
definitely.
It's COVID.
Oh yeah.
I mean, you look at like the NBA right now. Who was it? It was I think it was the Lakers or somebody. Like they just been having people like in and out, or it was Washington. That's what it was. They had to pick up, I think 6 people from the G League.
Wow.
And so they played. Like 4 of them started, and they were like, "This is the most packed a game would be for a G League game." And it's because they, Bill had COVID. I think Kuzma had COVID. It's just going around, man. I'm so over this mess.
Yeah.
I'm so over it, dog.
So how about I know you affected how has it affected how home buying and like loans and stuff like that have more people been reaching out, less people been reaching out, or
It's been, I mean, surprises have been crazy. I mean, I'm sure y'all know in y'all's market, I mean, we go hand in hand. We don't go any further than y'all go. So with us, it's been like before COVID, it was already nuts. COVID happened, and then the world shut down. So there was about a 2-month gap where it was like, all right, I maybe should start to look for another job. I may have to start going to strip clubs or something. I don't know. Like you're like, I gotta make some money.
Yeah.
And shortly after that, rates went low, real low.
Yeah.
They were in like 2s at one point. I locked somebody in on 1.8. That's almost 0%.
Yeah.
That's almost zero. That's low. That's less than credit card money. So like from then, and then when rates were low, everybody started buying. So then, as y'all know, inventory got low. And
Still is low.
Still is low. But on our world, it's just like, man, it's not going anywhere. Because the reality of it, people still want to buy a house, whether rates go back up here soon or inventory stay low.
So what happened? So like I remember, and right before we got on camera, you brought up about the rates went up.
Yeah.
I know something happened. I heard about it today, but I'm not hip.
But the biggest thing is inflation.
I'm about to say inflation and the Fed. They released their back securities. Don't get me to line about what all that stuff mean, man, because I don't deal with that. But the reality of it is, when the Fed does something, it affects not only the stock market or whatever, it affects rates immediately.
I think the Feds was buying a lot of bonds.
Back securities or whatever they're called.
And now they kind of backed away to where they're still buying it, but it's not as on that high value. So I guess
now
rates going up.
Rates are up, man, and I mean it's gonna scare some people, but the reality of it is there's so many people in the market. Even if it scares half of them, you're still gonna have a good market.
And that's one thing that we've been dealing with. A lot of people saying, "Well, I'm gonna wait." I'm like, "You wait, price is still going up, so you better off just getting locked in now."
Yeah.
And starting the process.
And think about this though. Like y'all say, purchase prices are going up, right? Well, rates go up, even go up 0.5%. That can almost be $100 swing. And you think about people trying to budget now, like, you know, you budget on $100 and then prices continue to go up. You be out $300 before you know it.
Yeah.
And now that really going to discourage you from even thinking about buying. You're just gonna be like, all right, I'll just rent. And we all know about renting versus buying, but yeah, I mean that's what happened, man. And now we're gonna see what's gonna happen. And I think the more qualified buyers, they're still gonna be in the market. It's just I feel bad about the lower end first time home buyers, tight debt to income ratios, tight files, trying to squeeze out, you know, $250,000, but they trying to buy.
So where do you see that going? Like, what's the solution for those people? Like, so if I'm somebody's potential first time home buyer, I'm not ready to buy today, but I'm like, okay, well, maybe next year, maybe the end of the year. Like with what we're talking about right now, with interest rates going up and my budget's tight, what are some of the things that I can start thinking about now so that a year from now I can
pay more debt.
Pay off more debt.
Paying off more debt, so you get your debt to income ratio down.
Gotcha.
That's what I tell people. I'm like, man, if you are in a tight spot and you know things are going to continue to go up, so that means when things continue to go up, that means your sales price amount goes down.
Yeah, so your buying power.
Your buying power go down. So how do you contradict that? Is get your debt in order, pay off more debt. Like we were just talking about, I think in our world, everybody's quick to swipe the card.
Right.
Stop swiping that card. If you can't put it on your debit card, don't pay for it.
Yeah. And what's the rule is normally what, keep it under 30%.
30% as far as what do you call it? Like the credit bureaus. That's what
credit,
like if it's over 30%, usually you'll probably get.
I tell all my friends, like, you keep it under 10. I mean, honestly, I try to pay mine off every month.
Yeah.
That way I can keep my credit high.
Surprisingly though, if you pay it off every month,
yeah, I know.
It doesn't hurt. It doesn't help as much.
Yep.
And I ain't know that.
If you're over a certain credit score, it really don't affect you.
Doesn't do anything.
Yeah.
And the quickest way, like you were just saying, the quickest way to see your scores like go up quick is having some balance up there, but managing it.
Yep.
Keeping it under 30, like you said, preferably under 10, but having a balance up there actually helps.
Yeah.
But not anything too crazy. You know, people heard that and like, all right, well, I'm about to buy this furniture.
right.
I know. I get the calls every day. What's the home buying process?
Yeah.
For us as a realtor, I always, refer them back to, getting with a lender.
Mm-hmm.
Definitely now I recommend you because you are a preferred lender.
Yeah.
But on your end, what's the steps when you're trying to get qualified or client trying to get qualified?
So yeah, I mean, it obviously starts with me, man, which I like because, like I told you before, I can talk and I like dealing with people. But I think it's before you even come to me is a reevaluation of like your situation. So if you're renting a house and it's $1,500, and you don't, as a first time home buyer or somebody not knowledge about the market, like you don't know how much $1,500 is going to get you, right? Like I mean,
Right.
I wouldn't even know that. Yeah. And I always relate it to like buying a car. Before you go buy a car, you know what your taste look like. Like all right, well that new BMW just came out, whatever. But like you don't know what that BMW costs or how much you're gonna have to put down to get to where your budget is.
Yeah.
So I always like, man, just let's have a real conversation around what it is you're trying to do. Because the first question I ask people is like, what's important to you? Because what's important to you may not be important to you.
Exactly.
And what's important to you may actually help you better than it helps you. But right now, the rates were so low, and like now they're coming back up. People are like, "Well, my cousin just got, 2.5." Whatever. I'm like, "Well, your cousin probably just paid, 2% in discount points to get that."
Mm-hmm.
So my process is, when you reach out to me or y'all give me somebody's contact, I'm able to reach out and like just have a raw conversation. I don't want to hear about. I don't talk about rates, nothing. I just want to know like what it is you're looking for, how it is you're trying to do it, how much money you got to put towards the house, not just down payment, but how much you got set aside that you can be like, all right, man, well, if I got to come to the table with $15,000, I got 25 saved, so that ain't hurt me. Yeah. And now I can go in and kind of structure the loan or structure different things that you can do to get to where that budget is or where the desired amount is and still meet that $15,000 goal. So they come to me, do the application, whether that's over the phone or, you know, I got some old school people that are like, yo, let's meet. I want to see you put everything in. You do that, but now everything's so like everything's so electronic. You know, especially due to COVID. Man, I haven't done a mortgage loan application in person probably 2 years.
Technology.
Probably
Yeah,
2
better
years,
that way.
man. And now, do I?
Yeah.
I can care less. I mean, it's all about the client.
I was say, yeah, I can see
Yeah.
how it would be about the client.
Right.
You know, some people want to, you know, get that energy, get that, you know, get to know you,
Mhm.
really see if you got that best interest. Because in the mortgage lender world, everybody might not have your best interest.
That's for sure.
Yeah, and I think
That's
a lot
for
of
sure.
people just think that some of the rates will be the same because y'all all do the same thing, but it's not the same.
It's not because you got different investors. Every lender has a, you know, different investors who they're selling their mortgage to after you close, and those are the ones who are making the rates. Like, I can't give you a 2 and 8. I mean, you're not lending my money. So it's like, you know, it's true. It's like, man, you know, you go to a bank, you're gonna get that bank rates.
Yep.
And that's all you're gonna get.
All right, so then let's start off like with the questions that I need. So, what is my credit score gotta be? I want to buy a house. What is my credit score gotta be? My credit's not good. So what I gotta do? Where at least I gotta talk? In order to talk to you, where I gotta start at?
But I mean, you can have whatever kind of credit score to talk to me.
Alright.
I don't want to like.
I don't want to be embarrassed.
Everybody
I
got
don't
it
wanna
now.
be embarrassed, and I don't want to be turned away.
But that's the reality of this market, though. I mean, if you're afraid of no, then you probably.
No, I'm saying when I come to you and I'm gonna say, hey, can I get a loan?
Yeah.
I don't want to be embarrassed. I'm gonna know when I come to talk to you that I'm gonna be able to get a loan. So what's my credit score gotta be before I come into your office?
I would say 620 to start off with.
Okay.
I would say 620 to start off with. But that answer is like kind of skewed because
Right.
you know you can have a 640 or a 680 and still get denied for a loan.
Gotcha. Okay.
You know what I'm saying? Like that's the hard part to tell people, but the reality of it is 620 will get you in the ballpark of at least allowing us to push it through to see if you approve for something. I don't know what that is, whether that's
Right.
VHDA or FHA.
So what if let's just say I got a 580 credit score and I'm like, all right, I want to buy a house. I really don't know what I need to do, but I know I'm not ready, so I don't want you to run my credit. Or would you suggest that we still do that, or like what am I supposed to do?
I go off comfortability, if that's the freaking word. Because some people don't mind you pull. I mean, if they got a 560, me pulling the credit, you're already at 560. Like, I mean, you're not approved right now.
I don't want to hurt no more.
But this is what I'm trying to say. If it dings it 2 points, 5 points, you're still at a 555.
So when I get my credit report, it doesn't really hit me hard.
No.
So how much, like just a few percentage points?
If that, it's all about how many times you've had your credit run.
Okay.
So like if I'm shopping around at us and Wells Fargo and I'm just getting everybody to put my credit, yeah, it's gonna get, you probably get dinged 10 points or so. But like if you come to one person and you say, hey, look, like let's get a game plan. You know, I got a 580 credit score, but I got money put away. I'm not in a rush. I'm not moving out my house until 2023. So I got time, but I'm serious about it.
Right.
I want to work on it. All right, well, let's pull it, see what you need to do. Pay off a couple credit cards or pay down a couple credit cards. And then sometimes, you know, some people life happens to some people, right? So like some people got collections and late payments and stuff. That stuff ain't easy to get off. So like the quicker you get ahead of it and you got a game plan and you got like call to action, you're like, all right, well, Mike said this, and you see it. Cause like me just telling you, yeah, keep it under 30%, credit scores will go up. You don't know how much it's gonna go up. Because you may have like collections and stuff on your account. But if I pull it and I say, yo, you gotta pay off this collection, you gotta remove this authorized user, get a secure credit card.
You're able to tell me like
Just simulate.
Okay, bet. So, cause I'm asking for, you know, if I'm a buyer, I want to know, cause I don't think most people know this. Most people, I don't think, realize that if I come and talk to you, that you can literally tell me doing what first is gonna help me the most, or doing this, focus on this first, and then maybe you'll be ready. You know what I mean?
Yeah.
I don't think a lot of people realize that. They just like, well, I'm not at 620. I need to work hard. You know what I mean?
No, that's true. I mean, I get that a lot when people are scared to get their credit pulled because they're like, I know I'm not ready. But the reality of it is, well, if you know you're not ready, but you also don't know what you need to do.
Right.
You're never gonna be ready.
So really, what I guess what I'm trying to get out of you is like, it makes sense to get, even if you know you're not ready, but if you may be close, it makes sense to get your credit score pulled because that's gonna be able to get you over the hump, right?
If you're serious,
Right.
And if you give you a plan too, it's kind of going back like going into the new year, having that plan and having that structure to where they're able, a lender is able to help you say, hey, you need to do this, that.
Yeah.
And it's up to you at the end of the day.
That's the main thing that I tell realtors who if they send somebody to me and they're not, they don't think they're ready. I'm like, all right, well, I don't mind doing it, but I don't want to waste their time, our time, your time. If they're serious about wanting to buy a house and they say, Mr. Mike, like, if you tell me what I need to do, I'm gonna do it. You got a serious buyer because I just told them what to do and they're texting me updates. They're like, yo, I just got this deleted. I got 2 more things I'm working on. You got a serious buyer right there, and that once they're ready, you don't go to work for them. But like sometimes it happens where people get told no and they get discouraged, and then next thing you know, they're just out of the market and they never do anything. And that's the part that I don't like, because I'm like, man, like it's possible. I think a lot of people think it's impossible to buy a house.
But I think that's why I like working with those clients. Right? To be honest with you, I was that client.
Yeah.
I bought my house in college, not really knowing. To where it's like, hey, we had to take steps.
Yeah.
You know what I mean? We started off in an apartment, and then from our apartment, we started paying down debt, paying down the smallest bill. Hey, we can pay that off.
Yeah.
Call, hey, I need y'all to report this, let them know it's paid down, credit jumped up. Got credit cards. You know what I mean? Then we started putting, each other on the credit cards, put our kids on the credit cards. When our credit got good to where now our whole family credit got boosted up to where I like helping it, because I was that client at first.
Yeah, people need to hear that though.
Yeah.
Because I think like you said something about people don't know what we can do, but like they also look at us in our industry and think we got it going on, or we, we can't even relate.
Yeah.
Because all they see is the transaction, but like, that's what I've enjoyed. It's not because y'all are here, but I've enjoyed something about Icon. It's like care. There's a lot of people in our industry, not just me in the lending side or y'all on the real estate side. There's appraisals that don't care. There's a lot of people in this industry that really don't care about clients. They're just like, how can I make my money? How can I meet my goal?
Right.
But like, when you can be relatable, like, yo man, look, I was there, man, it sucked, but this is where I'm at now, and I took it serious. They're like, oh, all right, well, I can relate more a little bit. And not only does that allow them to do business with you, but like it puts down that iceberg, man. Like it takes down that I don't know. Like I think our industry just gets so get a bad rap, man, because people got screwed up, and like the more relatable that they can figure out that we are, that like I'm not perfect.
See, and then for me, it's not about the money.
Yeah.
It's about helping somebody else reach their goal. And your house is always normally the biggest purchase you will ever do.
Should be.
So if I can help somebody complete that, I feel like I did my job and I'm excited for it. And then not only that, I'm big with ownership.
Okay.
When it comes to us, I feel like that, a lot of us not thinking about ownership. Ownership is the key.
No. Say that again. Why'd you get real estate? Like, what would be something you think you got in real estate?
I got into real estate because the investment side.
Okay.
I always wanted to invest, but I also, as a kid, riding around looking at those buildings, like I'm gonna own that building.
Yeah.
I'm gonna do this. And right now, that's my goal. My goal is, I want to own a commercial property. I want to own more doors. You know what I mean? I'm trying to pass that generation wealth down to my kids, and it's all about ownership at the end of the day.
Yeah. You think a lot of our people don't like, one, know that it's obtainable, but two, just like don't like fear that it won't happen.
I think it's more so
Or
providing the information and the knowledge.
Yeah.
It's just not knowing. You know what I mean?
I think so.
For me and the people I'm around, we are those that's creating that first generation wealth.
Yeah.
And it's almost like a roller coaster. You hoping you're doing it the right way, this and that. But now there's so much information out here to where you just gotta take it in.
And be around the right people.
Yeah.
That's I think the biggest thing. I mean, my mom still don't own a house. And like I got into this industry not knowing. I was so green. I didn't even know it was a T in mortgage. Like I was green, bro. So we rent all our lives, and I finally understood like man, this is obtainable. And I started sharing the information with mom and stuff, and like now she's working on stuff, but I'm just like, And how crazy that would have been if my mom would have knew what I knew,
Oh,
right?
man.
And been able to just be like, yo, like that's what excites me about just like helping people. I kind of see my mom a little bit in every client, whether they're well qualified or not. It's like, bro, you deserve a shot, man. Like you deserve a chance to have this. I don't know if it's an American dream, but like be able to have a chance to buy a house. Like
Yeah,
you definitely deserve.
That kind of brings me to the other question that I had to follow up from my previous one, which is when I go and like, let's just say my credit's fine, right? Like I'll qualify for a loan. I have, I don't know, 700 credit score.
Mm-hmm.
But I don't have any money saved up, or I just gotta, I'm renting.
Yeah.
You know what I mean? I'm paycheck to paycheck.
Yeah.
So I come to you and I'm like, look, my loan, my rents, or I'm moving out my apartment soon. I want to buy a house. I don't have any money. What are my options? Like, what are some of the things? Or one of the things I know is a lot of people think that they got to put 20% down for a house. So I know we know that's not true.
Yeah.
But like, what are some of the things that we can tell these people that don't have a lot of money, what some of the options that they have available to them?
Like some of the different grants.
Well, for example, FHA loan? What's the typical FHA loan?
3.5%.
3.5.
Yeah, 3.5% down payment on FHA.
So also, I know that everybody thinks conventional is 20%. We had a conversation today. We learned that's not. Well, I know that's not true.
Yep.
But what is something? What determines that?
It's just guidelines, man. Yeah, and unfortunately, it's not like it's out to the public, but it's just hard. Like if you don't even know what you don't know, you're not looking for certain things, right? So like you can do a conventional as low as 3%.
Okay.
There's some more.
I don't think a lot of people know that. You said conventional loans automatically 20%. Is that what we hear about?
Yeah, you can do it as low as 3%. I mean, there's definitely guidelines within that. I always say the lower the down payment, the more strict that loan's gonna be. So that's why VHDA is a very strict loan. And like, people who do them and get them through, like they know what they're doing because it's such a tight. You have to be a specific kind of borrower for that. And so yeah, you can do a conventional at 3%. You can do it at 5%, 10, 15, 20. I just did one today, or it's closing this week. It's a USDA loan. Now you're not gonna get that a lot around here in Richmond because it's for like the rural kind of areas. But this lady's buying like Nottoway County.
Okay.
I mean, $380,000 on a house and like no down payment, mortgage insurance cheap, and like I had to relearn USDA because I did like maybe 5 of them in my whole career, but there's a lot of loans out there, man, that you don't have to do 20%. But it goes back to like what's important.
Right.
So most people think 20% because mortgage insurance. They want their payments to be as low as possible. Everybody don't got 20%.
Exactly.
You know?
Well, that's what
and going over asking prices.
That's what I'm saying. So a lot of times when it comes to your question that you was asking, why it brought me back to that is because it's like a lot of people run into like we think it's unattainable because it's like I don't find 20% of $300,000.
Yeah.
Like you know what I mean? So
a lot of money, man.
So
a lot of money.
I think that knowing that 3% or 5% is possible, I don't think I just think a lot of people don't realize that, or even the fact that just because you bought a house for the first time home buyer, a FHA loan, doesn't mean that you can't use an FHA loan again. It doesn't mean that just your next house has to be a 20%.
Yeah.
So I think that some of those, just like he said before, it's like knowledge and knowing that information, knowing what's available to you. You don't know what you don't know. So I mean that's part of the reason why we have this, so we have some of those conversations and get some of that message out there, and like so that at least people know what questions to ask.
And unfortunately, it's like y'all know a lot about house. I'll never try to do your job. When people ask me questions about how much is I get them approved. They're like, how much? I want a 4-bedroom. Hey, you got to talk to them because I don't know what that's gonna get you. But unfortunately, in my world, a lot of only us we know that information, and like that's the tough part because it I don't know. It kind of forces that buyer to be vulnerable with us because they can go online, but Google, Wikipedia. I mean, you're not gonna learn much out of that.
Right.
But I found it recently. I've just been like, when people come and like open and vulnerable about what they're trying to do,
Mm-hmm.
usually they can learn a lot. And like for how I orchestrate my business, it's like, man, I'm gonna give you options. So just because you're a first time home buyer, I'm not just gonna give you VHEA first time home buyer. Like you're gonna learn through this process. Like what Kevin, you gonna learn it there.
Yeah.
Like you gonna learn because, like you just said, man, we just don't know.
Yeah, I know when I bought my house, I didn't know half of it.
Yeah.
And honestly, I probably would have did it different.
What do you think?
That's what I was about to say.
for
Man. I wanted to know, like, what's it? I'm gonna ask you too. Like, what's some of the
for
mistakes?
me, I would have only did it under one person name.
Okay.
So that way we both don't use FHA.
Okay.
So, instead of me and my wife going along, if I was strong enough candidate or she's strong enough on her own, I'm gonna let that one person do that.
Yeah, like VHEA, like the first time home buyer, or just regular?
First time or just regular, this person home. So that way now I'm thinking on the investment side, I can go get another loan for the investment side. And then not only that, like for me and talking to my kids, I'm looking at for my kids, I'm hoping that they,
Yeah.
take in what I'm getting
Yeah.
is like a duplex or multifamily. So where that way they live upstairs and have two people rent out the other one and it's paying their rent, so and then they live free.
Yeah.
And to me, I just didn't know that. I had no idea of none of this information, and I could do it like that because you still can get that FHA loan with a quad, right? I think it's
Up to 4 units.
Up to 4 units.
Yeah.
People don't know that, and then I guess my situation different. I had kids, so we like, hey, we need to get a single family house.
Yeah.
But if I would have started a little earlier before I had kids, I would have probably
I
had
was about to say.
quads, and then I would have worked my way into a single family.
Yeah, I got a couple of my buddies who their parents bought them when they went to college, bought them their house for college, and for 4 years they lived there, but they were rented out.
Yep.
4 or 5
That makes
people.
sense.
Yeah.
And then basically that house paid for that person's education.
Exactly.
Like because they just took the equity out and just like, all right, well we're just gonna pay, I don't know, JMU or whatever it all.
Right.
Take out 70,000 after 4 years and like damn, all right, well that's
And it's like,
that's the
but
way.
it comes from what we talked about before. It's like our parents didn't know that. So
Yeah.
now we know that we have to take advantage of that information, take advantage of that knowledge, and practice, put it into practice so it can happen. And we also got to spread the word, to our peers so that we can make it happen as well.
Yeah. Are y'all thinking about doing any like seminars and stuff this year?
That's the goal.
Yeah.
Hopefully at some point we can do it something here,
Yeah.
and even have that, maybe have that filmed as well. So
They're beneficial, man. I mean, because even people who aren't ready or not even thinking about buying a house, like just to come and take it back to the school days, just come get some gems, get some knowledge, and be able to just ask questions in a safe environment.
Yeah.
Because a lot of first time buyers or like home education seminar stuff, a lot of people are scared to even like ask questions. But then like if you you do them the right way, or they start to see that y'all are not in it, like you said, for the money, and you just want to give knowledge back. That's the easiest, quickest way to just be able to tell somebody, hey man, if you're serious, come on a Saturday.
right.
Like if you're serious, I know your weekends are important.
Right.
Come on a Saturday, come learn about buying a house.
Right.
That'll really spread some knowledge to a lot of people.
So I know a lot of people right now, like a lot of people that's interested in real estate are interested in real estate for the investment aspect of it, investing, and rehabbing, flipping houses, stuff like that.
Yeah.
What can you tell us about like investment loans or rehab loans? Are there things like that for like first time home buyers? I know you said you could use it for a duplex or a tri or a quad.
So just let that be
But
your first.
one of the first things I thought about when you said that, I'm like, yeah, you could, but sellers really, this is a competitive market. So if it's a quad on the market, it's gonna be buyers trying to get it, and the conventional loan gonna get it almost every time.
Mm-hmm.
Right now, in this market.
Yeah.
In this market. So I'm like, I hear you, but like, what other options do we have like outside of an FHA loan if I want to get an investment property? I mean, I'm a first,
Yeah,
like,
that's about all you got.
Yeah.
Unless you're putting your hard money loan, which
Okay.
I don't deal with, or I saw somebody, January, back in November, they did like 3 friends went in on it together, and it worked. They all occupied it, but it was 3 incomes,
Smart.
and that was a way to not burn, 5% or 5% of your own money. You did it with 3 people that first time home buyers went in on the house and they got it. But unfortunately, I mean, there's a lot of guidelines, there's a lot of stuff in the mortgage world now, which is good because a lot of stuff in our field now that eliminates taking advantage of the system.
Yeah.
A lot of ways around a lot of stuff, which you won't get me on camera telling you, but it's just a lot of guidelines because basically what happened to me, and back in 2008 before all that stuff happened, people did stuff.
Oh yeah.
And like that's why we're in that situation. Yeah. So now we're all unfortunately now we gotta follow certain guidelines because somebody screwed up. And something like investing, if you want to invest in, there's only a couple ways you can actually do it. And conventional, like you said, is the best way to do it.
And I'm gonna have to put 20% down.
If you're not gonna occupy.
Let's say if it's an investment property, you're not living in it. That's when you got.
Yeah, but but that's the word investment is like it's so.
Right.
It's so broad, right?
If you're not occupying.
If you're not occupying, you got 20% down.
Yeah,
it's simple. But if
so
you
if I'm
are
working in it, what they call it, house hacking, basically, right?
So house hacking is when you actually purchase a house and you're staying in it.
That's what I'm saying. So that's what I'm saying. So really, what we're talking about is you can do it with house hacking.
Yeah.
So
stay in it for a year.
you gotta stay in it for a whole 9 months. Is it
if you're FHA, you have 90 days.
90 days.
That 90 days.
Not a year.
Yeah, you can't sell the house until after 90 days.
Okay.
So it's FHA.
So if I wanted to, let's walk through this real quick because this is interesting. Everybody don't know this. I'm just saying, right? So look, if I want to buy an investment property, right?
Mm-hmm.
This is game, right? I'm just saying. I'm just saying, hey, look, if I want to buy an investment property, I can buy an investment property with an FHA loan as long as I live in the house, right? As long as it's my primary dwelling?
Yeah.
Okay.
Yeah, the reality of it is, man, we can't control, there's only but so much betting out we can do as lenders, right?
Right.
Like, I can't control your thoughts. I can't control what I think you want to do. But I can control what you tell me you want to do.
I'm supposed to intend to live there for at least a year.
No, what I'm trying to say is, if somebody has in their mind to invest, and invest as in, I want to flip it over.
Right.
Like, obviously there are guidelines that's going to limit them to do that, right? Maybe that's a time frame or a timeline or whatever it is, but if somebody tell me that they're going to occupy the house, that's what I can't be like, bro, are you serious? Hey, look me in my eye, man. Right. So that's the part where like people do get around certain things because intentions and then what you do after you close. Now I've heard that they're starting to crack down on planting people to go visit certain Popeyes or stuff getting flagged from IRS and stuff. So there's a lot of stuff that you can try to get around.
Investigation crews and stuff.
But yeah, you can try to get around. But if you sloppy and you're not on top of stuff, you can really get screwed up.
Right.
Because at that point you're lying on the application.
Right.
But the reality of it is I can't tell you what to do. After you buy a house, it's up to you. As long as you make those payments, man. That's our thing. We don't want the recession to happen again. So yeah, you gotta limit that stuff, man. Do you get a lot of people trying to invest?
That's the majority, I would say, of the people that reach out to me about real estate or want to talk to me about real estate.
Yeah.
Is them wanting to get into investment and flipping houses. I think that's, for me, I would say the majority of the people that reach out to me.
Yeah.
That's what it is.
Why do you think? Do you think it's just like a hot commodity or something right now? Because I just don't remember, I've been in this for 6 years.
I think everything is kind of hot now. You got social media. There's so many people during COVID that came out showing people how to, invest in real estate.
Yeah.
How to look at stocks and option trading. So right now, I think it's just visible. If you're on social media, it all depends on who you follow. I know that's all I follow. It's there to So now there's people very interested in it, like, hey, I want to go do this.
Yeah.
I mean, the biggest thing is, it's, I can't say it's easy, but it ain't hard as well. It's just having a team. And like you said, it's making sure, one, go back to this process of getting approved. Making sure you know, debt to income low, making sure your credit good.
Yeah.
And it's getting pre-approved.
Yeah. I mean, that's where it starts. I mean, that's definitely where it starts. It's just like, I don't know. It's like, I think some people can mislead it. You know what I'm saying? Like some people can make it seem like this, like it's gonna happen that way for every single person that gets into investing.
Yeah.
And like, sometimes I wish that like, so I hate social media, so I'm a little on the bias side, but like sometimes like it portrays this like, you gonna be successful. I mean, and granted, I mean, if you put your mind on anything, you know, I'm almost to say you can do it. Yeah, but like,
gotta manifest.
some people get into it, man, like we were just talking about begin with, they just don't have that knowledge about it.
Yeah.
And then they get screwed up, and then next thing you know, chapter 7 bankruptcy, and they're back to square one, where it's like if they could have had some good coaching, because I do think like if you invest and like you got good mentors, good coaching, and you do it the right way, like you can do well, and you can do well stressless. Like you're not stressing out about, you know, getting caught, or you're not stressing out about something going right. But I've had a couple of my buddies get into investing even before I was in the mortgage world, and like you know, they got kids now, they're you know, they're not in a good spot credit wise, or like, you know, financial, and I think it's just because they didn't take the time to learn about what they were about to get into. Instead, just jumped into it because they saw somebody, man, I made $30,000 this month by investing in this, and they're like, yeah, shit, I want to make $30,000 a month too. And like they just didn't take the time to learn about what it takes, you know, how to manage your portfolio, how to be a landlord, or whatever it is on the investment side. Like they just
I didn't learn that road.
Really?
Look, I know a lot of people own a lot of properties and stuff like that. I never want to be a property manager again.
Well, how come?
Ever.
How come? How come? Great.
It's just a lot of work, man. Like it's a.
But you can always hire somebody.
That's what I would do in the future. Yeah. Like that's what I'm saying. So if I was to purchase more properties that I was gonna rent out, something like that, I would definitely hire a property management company.
But that's also people knowing that you're in the weekend. Like
Right.
you don't do nothing that you weekend. You can learn it, but have somebody else that run that side of your business or whatever you decide to do.
Right. Yeah. No, you're absolutely correct. Like I just learned the hard way. You know, everybody's different, like you said. So some people, they enjoy doing that. You know what I mean? They don't mind going and fixing the toilet if they got to for their you know,
pay me
tenant or whatever. But for me, I'm like, nah, like it's not even worth it. And then if I go through a year or two and I'm breaking even, I'm like, you know what?
Yeah.
Like this is more work than it's worth. And I had people warn me on the front end that told me that.
You're talking about breaking, you're talking about far as the passive income coming in. Like,
yeah,
I got you.
Yeah.
So I had people tell me on the front end that it was like that, but I just thought different. And so what I'm really getting at is people jumping into stuff before they really know. But part of that is also that's the opportunity to learn as well. Like I think that there's no other way that I would have. Nobody could have just told me and I believed it.
Correct.
You know what I mean? So I also had to do it, but because I did it now, I know that's not something I'm interested in.
But some people can bounce back from that.
Right.
Like you know what I'm saying? Some people can take that hit and be like, all right, well, what's next? Like, you know, and continue to do it, but some people get deeper into it and deeper into the negative side, and it's like you can't climb out of that.
I would say a lot of my investors that I know, friends and just people I ran into, I mean, I think they all hit a spot or hit the times where they was like, you know, they really got hit.
Yeah.
You know, especially if you was investing right before 2008.
Yeah.
Everything happened. But a lot of those now, they still back in it. So it seems like it's definitely wealth created within real estate. Where it's like,
I think so.
Anything that's worth having, you're gonna learn, and you know sometimes you learn the hard way. I mean, but I think, you know, as far as creating that generational wealth, real estate is definitely one of those keys that I think that everybody should probably be.
I agree. I asked him earlier. I know you asked me these questions. Why you get real estate? Why did you like? What was your initial thought when you were like, all right, I'm about to
get rich quick. I was like, I'm gonna figure out how to hurry and make some money. So, alright, so my story goes like this. Like, I really enjoy trading in the stock market. I decided to start investing in day trading.
Okay.
And while I was doing that, the people that I was surrounded by, I realized I needed money to make money.
Yeah.
So I realized that the people that I was surrounded by in the stock market, they made their money before stocks and real estate. Like, a lot of the people made their money in real estate. And they all own properties. I'm like, what am I doing? I started in the wrong place.
Yeah.
I need to go. Yeah. So that's why I went and started looking into wholesaling and flipping properties and started learning about that. Got a couple programs and really learned what I needed to do. And then I realized, well, I'd be a lot better at this if I had a real estate license.
Yeah.
So I got a real estate license. Once I got the real estate license, after learning so many things, I realized for me, the best way to really learn and to really get to where I want to get to, because it started off, I wanted to make a bunch of money. It turned into, I want to be a developer.
Mm-hmm.
So in order to get the knowledge I want to get to, I felt like being a realtor and helping others with their goals would help me really learn the process without having to take the bumps and the bruises myself.
Yeah.
So that's kind of like long story. You know what I mean?
That's honest though, because I mean, the reality of it, we still gotta make a living.
Right.
You know what I'm saying? We still gotta.
That's
still gotta pay
just
bills.
like the biggest thing is like it's been a while since I actually bought a house other than my investments, and that was kind of cash. But as far as when people do get pre-approved, so pretty much after you run the application, they're solid, they got the good credit, they got everything else they need to get the pre-approval of. How do somebody supposed to figure out trying to keep the house within their budget? Because a lot of people, mortgage lenders just say, hey, you qualify for this. You might be qualified for that, but that don't mean financially you maxing it out is the best thing for you.
That's probably one of my key points that I try to talk to people if they have time or they're willing to listen. And so to answer that question is, one rule of thumb is every $10,000 up or down in sales price, your payment's going to reflect by about $70. That's a good rule of thumb. So if I tell somebody your max is $400,000 and that $400,000 equals an X amount of a monthly payment, and they're trying to figure out, all right, so what do I need to be at to get to my budget of, I don't know, $1,800 or whatever.
Mm-hmm.
You can do that. That's a little quick rule of thumb. But I always tell people, and I say this, I'm like, look, if you were my mom or you were my brother or something, I would tell you to probably shop at X. And I say that in a graceful way. I don't tell them in the most, try to be as professional but as honest with people, because the reality of it is when you're being approved by gross income.
Yeah.
So your gross income, 58,000 or whatever it is, and that gross income, you're not seeing at least $2,000 of that.
Right.
So, but that's how we have to qualify. Qualify on gross. So I always say, go back to the drawing board, go back to your net income, make a budget sheet, figure out what the minimum amount that you're willing to pay for a mortgage off the net. So my wife and I, we're getting a house, and she's like, well, we make this, like we can afford this. I'm like, that's true. Like that's very accurate. We probably can afford a 1.5 million. I'm not buying a book. And then so when I broke it down to her and kind of help her understand, like it's gross, man. Like
and you don't want to be house broke. Like I don't want a person to be like that. I'm thinking nobody want to be like that, because you want to be able to do other things.
You gotta think about everything else.
Yeah.
Utilities, all that cable, because I always say too, is like a lot of the stuff that we pre-approved it off, there's a lot of stuff not up there.
Yeah.
So it's based off your credit report. What's up the debt on your credit report, your monthly mortgage in relation to your monthly income. That's what your debt to income ratio is. Verizon account doesn't show up there. Cable. Your phone bill don't show up there. Dominion Power, water, utilities, your groceries, your gas. I mean, you see where I'm going.
Daycare.
Daycare. So yeah, in reality, you got a low debt to income ratio based off your credit report, but you probably got Netflix, ESPN, all that stuff go into play that I don't take into consideration of your debt. So if you got another $1,500 out there that I don't even know about, but I'm qualifying you on $15 less, you're gonna be in a rude awakening when you get in that house and you're thinking, all right, so my payments are this, I should be able to afford that. But then next thing you know, I don't know, water break, you gotta pay for that, bam. You know, like it's real, and like a lot of people don't have those conversations.
Yeah, I try to do it with my clients, and then like if it's a couple, a married couple, I try to encourage them to look at it as one person income. If that one person is able to pay all that, pay the mortgage and pay all the bills by themselves, you can afford it. So if something happened, you have, COVID people, some people may have lost their job or whatever the case may be. To where now, if that was me that I lost my job, now my wife is able to pay everything on her own until I find something else. So I think that's another good way to look at it too, as far as just if you're married, it should look at one person.
Yeah.
Can I afford to pay this by myself?
My dad used to tell me something all the time, and I can't remember, but it was like, save, don't spend more than you, save 0.5% of what you make. Don't spend 0.5% of what you save, or something crazy like that. And it made sense. It didn't make sense at the time, but it made a lot of sense. It was just simple. It's like, if you can save half of your monthly income, just put
the 70-30 rule.
I think that's probably what he was getting at. But like, if you can put that somewhere and still live comfortable, you would never, your credit score will never be bad. You'll never get in a pickle, and you'll have emergency money for anything. AKA COVID. I mean, who the hell thought? Like COVID was gonna happen,
and then like you said, just the emergency fund. I think at first I used to always say I need to have at least 6 months worth of money to the side. If something happened, I can pay my bills. Now you really need to have a couple of years.
Right. A couple of years.
Then you have a couple of years. How many people really do that? I know this really wasn't a conversation me growing up, but now as me, being older and having my own family, we gotta have at least 3 years. So if any pandemic,
the world shut down,
we good for a couple of years.
Because now we know that's a possibility.
And the only way
that's a possibility now.
And the only way you can really get to that is like really, budgeting.
Yeah.
Having that 70-30 rule and just kind of looking at, like you said, and I do mine every year. I might even do mine every couple of months. So I look at all my bills.
Yeah.
Like, you know what? Because Comcast has changed and they won't even tell you. Call them back, you saving another $150. I'm just like,
quick.
You ain't gonna tell them.
And that auto draft hit, you don't even see it.
And to me, everything added up. That $150 or $200 is, I could be putting that into my stocks a month.
Yeah.
I can put that into my kids' 529 plan. I can put that in my kids' UGMA account.
Yeah.
You know what I mean? So it's like, I think people, we look at it like it's only $200. The $200 add up when you continue to invest that in compound interest every month to where it's like, see, that add up.
Somebody told me when I first got in mortgage business, they were like, if you put $200 or up, like just $200 a month towards your principal of your mortgage, you can almost chop your loan term down to half, and that blew my mind.
Yeah.
That absolutely blew my mind.
Say that again.
If you put up, I think it's, and don't quote me, but I think it's if you put $200 a month towards your principal, just your principal, so not just your monthly payment, but just your principal, you can chop your loan term down almost in half.
I know I try
200.
I try to make an extra payment at the end of the year, so I know that'll cut it down too.
Real, and I want to pull this out to look at the calculator because I'm very curious, and I hate not knowing numbers. $200 times 12, it's $2,400 a year. You do that times 15, yeah, that's $36,000 a year on just the principal. I mean, so $36,000 in 15 years on just the principal. If you do $200, and like you said, I mean, if that's $200, that people are just like, oh, it's no big deal. You get rid of that, and instead of having the best car, and you save $400 and put that towards. Now you own your house already, and that's the stuff people don't talk about either, because I wouldn't have known that if I didn't know what an amortization sheet looks like. If you ever seen one of those, man, those things are scary, because you're paying the first 10 years. I think you pay most of the interest on your mortgage. So like that loan term is not going anywhere. The question was basically how you can make those principal only payments. It's just whoever your service provider is. Usually they got it set up. So either it's auto draft. You can. Some people, I think Penny Mac, when we have ours, you can do 15th and 30th. You can make payments like that.
Mm-hmm.
But if you're gonna make an additional payment, either you gotta call them and say, hey, I'm sending an extra $300, and that's going towards my principal. Or now, like I said, everything's electronic. You can do it online. You can say, you know, if the payment is $1,500, you can say I'm gonna put $1,800, and it'll have like
have a box.
it'll have a box that says principal or just towards it. But if it don't, then don't make it. Call them and say, hey, I'm gonna spend another $400, and I want this to go straight towards principal, and they have to you know abide by it. So no, that's a good question because most people don't know it. Most people just set up, you know, they'll just throw.
And thinking you putting it towards the principal, and it's really going.
And they're not gonna tell you.
Yeah,
they're not gonna tell you at all. They're gonna be like, yeah, go ahead, keep sitting that. We're gonna keep making this interest on the payment. So
I had to call them. I'm like, hold on, my PMI should have came off. What's going on? When it come off? Oh, it about to come off? Yeah, I think that was like another 200 something. I'm like, thank you.
Yeah. I mean, you can shoot, man. It's a lot of lack of knowledge of whether you're not told it throughout the process or just not knowing that you can really start to, like, if you think about it, you sit back and think about it, you think about your 70-30, you're thinking about, you know, just $200 a month, or you think, like, a lot of us could be in a crazy good spot, but sometimes we want to, you know, I know, for example, I know sometimes my eyes get a little bigger than my pocket. And you know, you end up you end up in a place you're like, all right, I probably shouldn't have done that, but
I spend too much money on food. I go to restaurants and eat all the time, so that's what.
Bro, you're too thick like me, man. How do you eat that much?
And the good thing is they got apps for all that, where you really can, you know,
see where it's
track and see where your money going, to where you can, like, all right, let me readjust this.
Yeah, I saw one that was like Acorn or something like that.
Yeah, Acorn that actually invests your change. It rolled it over to, like, so if you spend like $1.50, it rolled it to $2 or something like that.
And they'll put the 50 cent towards it. That's
Do
pretty
you
cool.
use Credit Karma?
No.
No. Okay.
No.
So that's a good thing. I'm glad you brought that up. So what's a good, like, I know about
you said no, like, is that like a bad no? Like, why?
It's fake. It's a fake school.
It's like Zillow. It's Zillow for.
I don't know your world. I don't know your world,
so Zillow, pretty much a lot of people give us a call saying, hey, I saw this house on Zillow, the price is that. It normally be.
It'd be way off.
It's
And I have to tell people,
so
so we use that system, the MLS, to where we can set people up with their email, to where we can, you know, have the criteria set based on what they're looking for, to let them show, hey, these are the exact prices.
That's exactly what Credit Karma is to credit scores.
So what do y'all use?
Well, every lender has a specific third-party credit company that they use. I know we use CIS, which is like credit something solutions.
Yeah, I'm
Do
aware.
you have to say no because you're a lender?
You have to say no.
No, I'm saying, like, do you have to say no? Like, is it like I'm just asking.
No,
like, y'all not allowed to like Credit Karma? Like, I don't
no, man. I mean, because if you got most banks now, you know, give you a credit score.
Okay. Yeah.
So, like, I mean, and that's probably a little more accurate. So you gotta think about this. There's about 34 logarithms on how credit's pulled. 1 being the strongest, 34 being the weakest. Credit Karma pulls them about like a 27, 29 or something like that. And I don't know if that's accurate, but it's up there.
So most of the time it's too high or it's too low.
I've seen them both ways. And the reason why is, so obviously you got 3 bureaus. You got credit, you got Experian, Equifax, TransUnion, right? Credit Karma, if you got, let's say you got 9 trade lines, and 3 of those trade lines are going to all 3 bureaus. Another 4 of them are only going to Experian, and then let's just say 2 is going to the other 2. But the 2 that are going to just 2 of them are horrible. Like there's a collection that from like 1990, I don't know. Credit Karma won't pull that. So they're taking your best scores of, or the best trade lines of everything, and generating a score. So the score is fake because it didn't take into consideration that collection that you only paid off. That's still on your credit report because it didn't get deleted.
Yeah.
So it's not taking that consideration, whereas we're lending hundreds of thousands of dollars.
Yeah.
we want to know everything about everything that you've ever done or try to. And like, that's why when you go to buy a car, your credit score is a little higher too, because they're only lending you, $20,000, $40,000. I mean, unless you're buying something crazy, but the mortgage credit score is going to be the most accurate every time. Going to be the most accurate every time. So that's why I tell people, like, get your credit report. Like, there's nothing wrong with getting the report.
And then you get it. You can pull it one time a year for free, right?
Yeah, I mean, all our credit reports are free anyway.
Yeah.
I think it shows up on the fee sheet after once you buy a contract or something like that. But yeah, Credit Karma, man, I stay away from credit.
Yeah, I'm aware of Identity IQ. I use that.
I haven't heard of that one.
Yeah, I use that.
And they tell you your credit and stuff too. I just use my regular, like you said, banks do it.
Yeah.
Like credit cards and stuff like that.
Yeah.
I know we running down on time. We got like 3 minutes left.
But damn, we already at an hour.
Yeah. So we're gonna go ahead and wrap this up.
You want to?
Yeah, probably. I mean, y'all ready to, or you wanna?
I don't care. Don't tell me, man. Like I said, I can talk 1 o'clock in the morning. Don't tell me.
Hey, it's all good. I mean,
I don't know if y'all got other stuff y'all want to touch on.
You got something from that list or something that we missed? I think we good.
Okay.
What you think?
I think we pretty much talked about everything. We ain't going in depth of what you kind of, but just the difference of FHA.
We're gonna do more. We're gonna do more episodes and stuff like that.
The biggest thing was just like the initial part and how to get started.
Yeah.
Us communicating with you, and then the client giving you a call. So
Yeah.
I know you said you don't like social media that much, but I know you got like you got
I post-
Instagram or something.
yeah, I'll
So you
share.
wanna share your Instagram?
Damn, that's a
You
good
know the
question.
name of it off top?
MM12 underscore MM12 is my I think it's my Instagram.
Okay.
And then Facebook is just Mike Bird.
Okay. And then like you wanna share like any other information about who you work for and stuff like
George Mason Mortgage, best lenders in town, man. Y'all don't know. We get them done. We got construction loan, land loans, renovation, all your cookie cutter FHA, VHCA, first time home buyer. Man, I think this year or last year we did almost 700 million transactions.
If somebody wants to, run their credit or, looking to buy a house, what's the best way to reach you?
Reach out my cell phone, get connected with them. Reach out to y'all first. I would say reach out to y'all. Y'all get them in touch with me, and then get them the application, let them do their thing, make sure all this stuff is accurate. But then I'll pull it, and we have a little more of a detailed conversation after that. Figure out all that stuff. Man.
And he sent a detailed email.
Yeah.
That's one thing I like working with him.
Yeah.
I mean, I know exactly what my client needs. I'm like, oh, okay, all right. So,
Yeah.
Okay.
Now, man, if you're serious and you want to get to that point, whether it's not even buying a house, you want to get your credit score up to like readjust or whatever, man, just talk to us, man. We people. We people. We all been through a lot. We've been in this business good enough time to know what we're talking about. But if you're serious about it and you don't have anybody that you're talking to, come talk to us, man. Come talk to me. I'm available text, phone call, FaceTime, Zoom, in person. I just like to work.
Definitely come talk to us.
Yeah. Appreciate
Absolutely.
you coming out,
Absolutely,
boy.
man. Absolutely.
Yeah.
I'm Andre. That's Marcus, and this is Chopping In with the Keys, and we appreciate you joining us for our show. Likely to become a bi-weekly podcast, so look for us next time.